Vaibhav. In our today's session of Visual JForex, we are going to consider the indicator named momentum indicator. This is an indicator in which we see what is the difference between the current price and the prior price. We take any particular time period and we simply compare the difference, whether the price is rising or whether the price is declining. And considering the price move, we consider the momentum, whether it is bearish or bullish. So this indicator is fairly simple to calculate and fairly simple to use as well. But this is one of the powerful tool. Here we don't really have the description. We straight away head to the Visual JForex board developed by the Dukascopy Bank SA. Here we will add this indicator block, and then I will explain to you its functioning while using the charting as well, and then we will see how we can deploy this indicator block to design the automated trading setup. So here coming to this momentum indicator, we have to define these input parameters depending on which we will get the output result, and also we have to define these two additional conditions, which price we want the calculation to be dependent on. So here, before defining the input parameters, we need to see how this momentum indicator functions. As you can see from the chart here, this momentum indicator has been defined on the 10 candlesticks of 1 hour each on the US 30. So here it simply takes into consideration the price difference. Now what it will do for calculating the difference is that it will take the current value of this candlestick, and then we will go back. Now that MOM is defined for 10 time periods, so we will be going back by 10 candlesticks, and the current time is 8 GMT, so we will go to the 22nd GMT of 16th September, and then at that point in time, whatever is the value, it will be subtracted from the current value, and the difference that emerges is this output value for the MOM. As you can see, the difference is on the negative side. The prior value is higher than the current value, so we get the negative result, and as a result of that, you can see this value is on the negative side. If the current value is higher than the prior value, then you will see the difference between the two being on the positive side. So basically you get to know how far the price has moved compared to the prior levels, whether it has gone up or whether it has gone down, and we can easily see if the momentum has turned bearish or bullish. So this indicator is not going to have any lag, as it is simply dependent on the price action. So it is going to move with the price, and we will be having the current assessment quick and pretty swift as well, and as soon as the price moves, we will have it being reflected in this MOM indicator, the momentum indicator, and that's the beauty of it. This indicator is similar to the ROC, the rate of change, but here we don't normalize the price, we don't normalize the output value, and because of that, if we simply change the instrument, you will have different results cropping up depending on the underlying instrument. So in case of GBP USD, we see the value output value being in 4 decimal points. If we change it to say commodity like gold, we will have the output value denoted differently. So different instrument will offer you the different output values for the MOM, and that's because this is not normalized. We are not taking into consideration the percentages, and we are simply looking at the magnitude of the price move. Now coming to the Euro USD, this MOM has been defined on the hourly chart. Now whether you want to go long or whether you want to go short, it of course is going to be always dependent on how the momentum is there. whether the price is moving higher or lower. So after taking that into consideration, you will want to be on the same side of the trend, and in such scenarios you can rely on this momentum indicator to check how the price action is unfolding in the given instrument at any point in time. So you define this indicator whether you want to go for big trades like swing trades, or you want to go for short term scalping kind of trades. You can choose different time horizon, and depending on your time period you will have the output values which will be then used to take the trading decision. So now this chart is on the 4 hourly time frame. Here also this MOM, now that it is defined for 10 candlesticks period, it will be going back in time by 10 candlesticks. So now current time is 5 GMT, so we will have to count these candles and go back by that much time, and I think somewhere here 13 GMT of 15 September we will have the prior candle, and then the difference between these two candlesticks in terms of prices will be taken into consideration. Now that the current value is lower than the prior value, we have this MOM indicator in negative territory. Whenever the current price is higher than the prior price, it is in the positive territory. So it is fairly simple to use and also equally simple to understand. We can always change these input parameters, so I will explain to you while changing the input parameters on the Visual JForex board itself. So here we can change this default instrument. If you want to work with the gold, you can work with the gold, but while exporting the file in Java, you will have some difficulties. Because of that, whenever you develop the algorithmic setup for any particular instrument, you have to simply take into consideration its characteristics and then define it. But choose any currency instrument as your default instrument, then export it and save the file, and then later on import it on the JForex platform. There again you will need to change the instrument back to whichever instrument you had developed it for, and then it will work fine. So in terms of gold, you will have to do the same. You will have to take its characteristics and define the parameters accordingly. So let's, in today's session we will work with the gold. Here it is XAU in terms of USD. So we got this. We save it. We make it hourly. You can choose any time frame. Hourly is not like the only option there. For example, I am taking hourly. Shift is 0. If you want to change the shift, you can do that, the look back period. If you want to go back in time and see what was the difference, the price difference at that point in time, you simply have to write that value. Suppose if you use 3, then we will be going back in time by 3 candlesticks each. So the output value will be the value at that point in time. Time period, if you want to use this default value of 10, you can do so. If you want to change it to any other value, you can change it too. So here we change this chart to the gold and make it hourly, and let us change this closing price. The price is closing price, and we are going to take the momentum indicator depending on last 20 candlesticks. So here you have the price difference between the current candle and the candlesticks 20 hours back. So here we are taking into account the difference existing between these two. Now coming to this difference, we get to know whether the price is rising or whether the price is falling. So here we had this dip somewhere closer to 1950 USD per ounce, then the price action picked up, so we had this momentum entering in the positive territory, and subsequently as the price dropped we have MOM again showing in the negative territory. So depending on how the price action is unfolding, you will have these shifts happening between the positive and the negative territory, and that gives us the current status of the momentum. And that's why even I personally prefer to work with this indicator to see whether the momentum is bullish or bearish, but we have to take the appropriate time frame to determine what is the good enough time period for taking the difference. You don't really want the momentum to just trade back and forth. In such scenarios, lot of negative signal, a lot of false signals will be generated. And one way to trade using this indicator is also to simply see when the price moves from positive territory to negative territory. In such scenarios, you will be able to figure out that now the price is dipping below the defined parameter, and this means the price action is turning bearish, and in such scenarios you can go for sell trade. If you want to go for buy trade, whenever the price rises from negative territory to positive territory, you will get the idea that now the momentum is shifting on the bullish side, and in such scenarios you can think about going in for fresh positive trades. So both ways you can work with it. Other way is to simply take into consideration the value, whether it is too large compared to the average difference, and if we see much of an move has already happened, in such scenarios we can even think about playing for the overbought or oversold scenarios using other technical indicators. So that way also you can work with this indicator. You can use it in a standalone manner or in other with other indicators. That way also you will be able to utilize this indicator to your advantage. Now coming to the settings, whether you want the calculation to happen on the bid side or on the ask side, you have to define this, and which price of the candlestick you want to be used while determining the MOM also needs to be defined. If we are taking into consideration the closing price, the difference of the current candle's closing and the prior candle's closing will be taken into consideration. If we use high price, then the current high and the prior high will be compared. If we use low price, then the current low and the prior low will be compared. So that's why we have to be careful about which applied price we are working with, and then you will have the output value, which then can be utilized to define various conditions. You can put it in the if block and define the necessary conditions, other conditions which will be need to be compared, and assessment made whether the conditions are being fulfilled or not, depending on which the flow will continue. So that's how this indicator works, and you can use it, as I said earlier also, standalone or in conjunction with other indicators, and this is extremely useful indicator to work with. So that's it from my side for today's session. If any of you have any query or any idea to share, you can write it in the comment section, and I will be more than happy to take the discussion forward. Thank you all for joining in. Have a fabulous day and the weekend ahead. See you on Monday. Goodbye.